In the past, China often sidestepped tariff barriers by devaluing its currency, the yuan. This led President Trump, during his first term, to accuse China of being a currency manipulator. Now, facing a new tariff storm, China is considering adopting a strategy Japan used in the 1980s, voluntarily restricting exports and raising product prices, particularly for items like electric vehicles, EVs, and batteries, to appease President Trump. But will this strategy actually work? Before we dive into the analysis, we invite you to hit like and subscribe to the Know the Past. Understand the Present channel for the most unique insights. On March 21, 2025, the Wall Street Journal published an exclusive report revealing that China is exploring Japan's 1980s playbook, limiting exports and increasing prices, mainly for EVs and batteries. Back then, the US and Japan were locked in a trade war. The US pressured Japan to strengthen the yen to avoid steep tariffs on car imports. Japan responded with what's known as voluntary export restraints, raising prices and capping exports to the US at a fixed quota, giving American automakers a lifeline. This time, China might follow suit, proactively limiting exports of certain goods to the US to soften the blow of tariffs and trade barriers, with EVs and batteries as the main focus. Looking back at history for lessons, after Japan imposed its restrictions in 1981, its exports dropped by about 8% compared to the previous year. If China mirrors this and cuts exports by 8%, the impact on other countries wouldn't be massive. For them, selling 100 cars versus 92 makes little difference, especially since Chinese cars are currently flooding global markets like a tidal wave. An 8% reduction barely registers. It would take an 80% cut to make a real dent. Next, Japan took a bold step. It moved production directly to the US. By manufacturing there, Japanese companies created American jobs and paid US taxes. Since the cars were made in America, the US had no grounds to impose tariffs. That's how Japan navigated the situation back then. If China adopts a similar approach, it could appeal to President Trump, who has long pushed for foreign investment in the US. However, national security concerns linger. For instance, EVs made by Chinese firms could have backdoors installed, allowing remote control or data collection as they roll down American streets. A major security red flag. The second issue is domestic pressure. If China pursues this strategy, its internal market could buckle. China produces vast quantities for export, but if it halts those shipments and keeps goods at home, where production capacity already far exceeds demand, who will buy them? This is the biggest challenge. It's why China has long relied on a dumping strategy abroad. Over 30% of global manufacturing capacity is in China, yet it consumes just 13%. In other words, China's production is double its domestic needs. Without exports, how will it offload this surplus? These are daunting hurdles. According to a Financial Times report on March 17, 2025, China announced its 2024 economic growth target of 5%, aligning with the government's official goal. Yet, the reality is murkier. Last year, China's economy struggled, with key indicators tanking by summer 2024, prompting the strongest stimulus measures since early in the year. The National Bureau of Statistics claimed a 5% GDP growth, crediting steady investment and exports. But investment was lackluster. Exports were the real driver. In 2024, China's trade surplus hit nearly $1 trillion, an impressive figure. December alone saw a $100 billion surplus as firms rushed exports ahead of Trump's inauguration. Still, many question the 5% growth claim, arguing that a stable economy shouldn't be grappling with deflation. As Trump takes office, new tariff policies will roll out. Beijing faces a critical choice. Which way will the yuan go? During Trump's first term, when the US-China trade war erupted, not right after his January 20, 2017 inauguration, but in 2018, Trump initially sought negotiations to address trade imbalances. By 2018, with no progress, he imposed tariffs ranging from 10% to 25%, averaging 14 on 50%. China countered by letting the yuan drop 13%, nearly offsetting the tariffs' impact. Infuriated, Trump labeled China a currency manipulator in 2019. This time, Trump has vowed 60% tariffs on China, with an extra 10% if the fentanyl issue isn't addressed, pushing it to 70%. If tariffs soar that high, the yuan can't depreciate 70%. It would spark chaos. Citizens and businesses would rush to convert yuan to dollars. While individuals face restrictions, foreign firms in China could repatriate profits in dollars, draining the country. Even with a $50,000 annual personal exchange limit, people might exploit it to move money out. Meanwhile, those earning dollars abroad would hesitate to bring them back if the yuan craters. The result? A domestic sell-off of the yuan, with no foreign dollars flowing in, piling pressure on the currency. A plunging yuan, if unchecked, would make importing energy, food, and raw materials, vital for China's production and exports, far costlier, straining the economy. Last time, during the trade war's onset, the People's Bank of China burned through $1 trillion in reserves to prop up the yuan. Today, with a weaker economy and capital flight, stabilizing the currency could demand even more. Some analysts suggest the yuan's true rate should be 8 to the dollar without intervention. If the trade war escalates, it could hit 10 or 11. A devalued yuan would slash Chinese citizens' wealth. For example, 100,000 yuan today equals about $14,000, but post-devaluation, it might drop to $10,000. Travel abroad would become unaffordable, and people might scramble to buy gold or smuggle yuan into dollars. On the global stage, on March 22, 2025, Japanese Prime Minister Shigeru Ishiba met Chinese Foreign Minister Wang Yi in Japan. Afterward, Japan accused China of twisting Ishiba's words, a recurring tactic. China claimed it urged Ishiba to foster sincerity, trust, and harmony, adhering to 4 political agreements and respecting historical and Taiwan commitments. Japan's embassy refuted this, saying Ishiba instead raised concerns about the East China Sea, the safety of Japanese nationals in China, the release of detained citizens, and lifting seafood import bans. China's distortions may aim to fuel domestic propaganda and nationalism, betting that diplomatic courtesy would mute rebuttals. But lately, the US, Japan, the Philippines, and Australia have openly called out China's falsehoods,